markets are dangerous right now. Just last week, the markets were down. The media was saying that this might be the end. On top of it, we have Wall Street bets. We have Reddit forums causing all kinds of problems. We see more hedge funds selling than we've seen in over a decade. They're deleveraging as fast as they can. So what is going on? Are the markets ready to drop? And more importantly, how are we going to protect our wealth through this? Now, I talk a lot about moving out of the dollar into hard assets like gold, silver, and Bitcoin. But what happens to Bitcoin in the event of a market crash? Let's dive into that today. Let's look at what we can learn from history, the little bit we have, what we can learn from other online metrics, and what I think will happen in the event of a market crash to Bitcoin. So let's go. All right, so if you're new to the channel, my name is Mark Moss. Now, I like to talk about preserving our wealth, focusing on the money printing that's happening, how it's debasing our currency, and what we can do to protect it. Now, it's not about just piling up a bunch of money, but it's about having options for ourselves, for our family, to help other people. All right, so if you like these topics and you want to help me get them to more people, take a quick second, click on that like button real quick so the algorithm sends it out to more people. And if you're not already subscribed, hit the subscribe button and the bell notification so you're notified every time I put a new video out. Now, like I said, today we are talking about how dangerous the markets are. And if they crash, what's going to happen to Bitcoin? Is Bitcoin really the life raft? Is Bitcoin really the lifeboat, or is it going to crash just like everything else? So let's address that. So like I said, the markets are dangerous. We know that. I've been talking about Wall Street bets and I've been talking about how Reddit forums and what they've been doing to the market, right? They're sticking it to the establishment, which I love, but it's causing massive disruption. We've seen the entire market come down over that. And it's not even over. It's not even begun yet at this point. On top of that, we have the hedge funds scrambling to de-risk themselves, scrambling to sell to get liquidity to cover their shorts. And then on top of that, we have government regulators, legislators talking about new laws and new rules and new exclusions and all these things. And so, like I said, we have not even seen this begin yet. There is lots of things brewing, and it could potentially make the market crash. We are in a very dangerous time. It's very fragile, and we could easily see the markets move into a risk-off situation. As I talk about right at the top, the markets are the most frothy, and we could easily see things crash. Now, we have seen many analysts, including myself, talking about this, how the next market crash will probably be the biggest crash, the sharpest crash that we've ever seen. A lot of analysts that I respect, Harry Dent, David Hunter, they're calling for a 60 to 80% market crash to happen. And when that happens, when the markets crash, people are tight on money, right? All your wealth is tied up and you're watching it lose and lose and lose. Now, one of the typical methods of investing in the market is to use margin, to use leverage. And so what happens is as that starts going down, usually big investors, especially the hedge funds, they need to get liquidity to cover those positions. And so what do? They have to sell other positions, and they'll typically sell whatever is most liquid that's holding up. So they'll sell gold, they'll sell Bitcoin, they'll sell other positions to cover those margins. But as they sell it, it pushes those down, which then triggers more selling. And it becomes like this downward spiral that goes over and over and over. Now, how will Bitcoin hold up to this? Let's look at that. Now, first off, we don't have enough history. All right, we haven't really seen Bitcoin go through these big market crashes, but we do have some data to take a look at. Now, Bitcoin was created as a response to the 2008 financial crash. So it was created specifically to be the lifeboat for the 2008 financial crash and other crashes like that. But of course, it wasn't around. We didn't see what could happen to them. And since then, we've kind of been in this bull market. But what we can see is we can see that in Cyprus in 2013, the country crashed. And at that time, we saw Bitcoin hit new all-time highs. That was pretty good. We saw Argentina banned going into other currencies like dollars, and then we saw people flooding into Bitcoin. All right, so we've seen some response like this. But here's where I think we can get some good data. So gold is another hedge against inflation. It's another hedge against market crashes. Of course, Bitcoin is always compared to gold, right? Digital gold. And the reason why, it's a way for us to get out of the financial system. So how did gold behave in 2008? So let's take a look at this. As you can see on the chart that I have up on the screen right here, the blue line is the S&P 500. The orange line is gold. Now you can see right about 2008, both of the markets crashed. As a matter of fact, the blue line, which is the S&P 500, crashed about 50-60%, and gold crashed about 25%. All right. Now, right off the bat, would you rather lose 60% of your wealth or 25% of your wealth? Of course, I'd rather lose none, but I'd rather lose 25 than 60. Now, but that only tells part of the picture. You can see where it's circled on the screen. For the blue line, for the stocks, S&P 500, to get back to its previous all-time high took over 6 years to recover. Whereas you can see the orange line, gold, took only a few months to recover its high. So although it did crash at the same time because of some of the reasons that I've explained, right? People needed liquidity. People had to sell things in order to cover margins, in order to cover other things. And so they did sell gold and it crashed along with it. However, within a few months, it was back to its previous all-time high, and that only tells part of the picture. Look how high the orange line went after that. And this is the key piece. It's because of the response to the crash. So when the blue line, when the S&P 500, when the markets crashed, what happened? The Federal Reserve jumped to the rescue and printed trillions of dollars. Well, at the time, it was about $700 billion, ended up being over $1 trillion to try to keep the markets from crashing. So they injected all of this money into the system, which eventually got the stock market back up 6-7 years later. But what it did is it pushed gold to the moon, which is exactly what's supposed to happen. So although gold did crash with stocks, it was the response to the crash that pushed gold higher. And so since Bitcoin is essentially serving that same purpose, a store of value outside the financial system, we could theoretically guess that it might perform the same way as gold. Let's look at another chart. So in 2020, in March of 2020, we saw the same thing. This is the S&P 500, that's the colorful line, versus the orange line, which is gold. So we can see in March of 2020, the stock market had one of the fastest and sharpest drops we've seen in history, followed by one of the fastest recoveries. And it dropped about 50%. But look at the orange line. You can see that it also dropped at the same time for the exact same reasons, which were the margin calls, liquidity, etc. But it only dropped a fraction of the percentage that the stock market did. In addition, look how long it took for the stock market to recover its previous all-time high versus, as you can see on the gold chart, the orange line, how quickly it got back to its previous all-time high. And then, of course, the same thing, the response to the crash, which is a massive amount of money printing, massive amount of money injection, pushed gold up even higher, and it broke new all-time highs. Now, in March of 2020, the same time period, Bitcoin didn't hold up as well as gold. As a matter of fact, it crashed pretty hard, but let's take a look at why. So there was a cascade of liquidations. Remember, we talk about having to sell things that have liquidity. And what we saw is that BitMEX and Deribit are two leveraged exchanges where people exchange Bitcoin. Now, at the time, there was all these shorts. We talked about this before with the short squeezes. So as the price goes down, it triggers shorts, and then it gets more and more selling. As you can see, there was over $1 billion of contracts that got liquidated off of those exchanges, 700 million just on BitMEX alone. And in a report that Digital Assets Data Research performed, they said that the cause of this Bitcoin market crash was because of the order books on BitMEX and Deribit. Now, with the stock market, we have something called circuit breakers. There's protections. There's the plunge protection team. There's all types of measures that protect the stock market. So a circuit breaker, basically what it does is when the market starts dropping at a rapid pace, when it drops more than 7%, it halts trading, just stops. Oh, no more selling. We can't push the price down anymore. Bitcoin doesn't have a circuit breaker. So the stock market has this protection built in to do that. Now, when the S&P 500 drops by more than 7%, all the indexes will close down. Now, the SEC put this into place, what's known as Black Monday, October 19th, 1987. The Dow was down about 22% in a single day, which was, the biggest drop that we had seen at that time. Now, since they put these into place in 1987, we've only seen them triggered one other time, 1997, and then again in 2020. And in 2020, they didn't just get triggered, they actually got triggered 4 times. Now, in addition to the stock market circuit breakers, in addition to halting trading 4 times to keep the markets from plunging, in addition to that, the stock market got bailed out. We saw trillions of dollars created and injected into the markets, into bonds, propping companies up, all the different things that they're doing to get the stock market to come back up, which it finally did. And it finally did. However, let's look at this chart on the screen. So we can see this is 2020. The blue line is Bitcoin. The green line is the S&P 500. Now you can see in the circle that in the red circle that they both crashed again, right? But look at the recovery. So they injected trillions of dollars. They'd had the circuit breakers. They had trillions of dollars to get the market back up, and it's barely gotten over its previous all-time high. But the response to that, the trillions of dollars that were injected, look what it's done to Bitcoin. Sort of like what's been happening to gold. And so I believe that gives us a pretty good example, a pretty good idea of what will happen in the future. Now, just last week, Ray Dalio, one of the most famous, most successful investors in history, he put out a big paper, What I Think About Bitcoin. That's what he talked about. And he talked about Bitcoin. He said it's one of the best inventions that he's seen. He seems to be a big fan of it, but he seems skeptical on the future because, as he says, it's unclear. There's not enough evidence, which is exactly what I'm saying. I mean, it's only been around 10 years, so how much evidence can you have? But he has put together a couple charts, as you can see up on the screen right here, and he showed that the typical 60-40 portfolio, so if you invest with a financial advisor, they probably put you in a 60-40 portfolio, which would be 60% stocks, 40% bonds. If you're in that, talk to your financial advisor. You may not want to have that breakdown. But he compared the 60-40 portfolio to Bitcoin's performance, and he compared it to gold's performance as well. And as you can see from the chart on the screen, it looks like Bitcoin was hedging the 60-40 portfolio. But again, as Ray Dalio says, there's just not enough evidence to do this. So all we can do is look at the evidence that we have and then speculate what would happen in the future. But here's another thing that's important. Now, in the past, again, right, we don't have a lot of history. Bitcoin has 10 years, so we don't really know. But what we do know is that the participants in Bitcoin has changed. So even what might have been the case a couple years ago, it's completely different today. So in 2015, 16, 17, the market was made up of retail individual investors. And so they came in, they bet the farm, they put their life savings in it. When the market crashes, they sell and they get out. Right? They don't have the long-term perspective. They don't have the deep pockets. They don't have the investor mindset. Today, the market's completely changed. Today, we have institutional investors in. Today, we have JP Morgan, Citi. They're advising their clients on the price of Bitcoin, advising their clients. They put out a report that they believe that Bitcoin could overtake gold. We've seen Stanley Druckenmiller, maybe arguably one of the best, most successful investors in the world, Paul Tudor Jones, billionaire hedge fund investor, that are buying Bitcoin. Ray Dalio, as I just talked about, those are the investors. On the business side, we have Michael Saylor. He's a CEO of $1 billion software company. They put their entire treasury, $500 million in, and now he's leading the charge to bring more businesses, more corporations to put their treasury in. As a matter of fact, he's having a conference with 1,000 Fortune 500 CEOs where he's going to show them how to put their treasury in. We have the city of Miami now saying they're putting their treasury into Bitcoin. We have Mexican billionaire Rickard Pliego. He said he put 10% of his net worth into Bitcoin. Mass Mutual, one of the largest, oldest insurance companies in the world, put $100 million into Bitcoin. We have fintech payment companies, Square, PayPal, Visa, all getting into Bitcoin. And so the participants of the market have changed. The reason why they all want to get in is because they understand that Bitcoin will behave differently than a stock market. Their whole goal is about diversification. And so even though maybe historically you might argue that it wasn't the best hedge, because of the makeup of the participants today, we see that it might be different. And like I said, it's really about, if the market crashes, what is the response to a crash? And then what does that response trigger? The catalyst and the reaction. As you can see from what I have on the screen here, Paul Tudor Jones says that he likes Bitcoin even more now, and he believes that the rally is in the first inning. Paul Tudor Jones said that he believes that Bitcoin is better than a TIP, which is a Treasury inflation protected security. It's specifically designed to keep up with inflation, and he says it's even better than that. And of course, what does the future hold for us? Now, the future is uncertain. The future is not written, but there's one thing that we do know pretty much for certain. What we do know almost for certain is there is going to be a massive amount of money printing coming. There's 1.9 trillion on the docket ready to be injected. We know there's lots more through all types of social programs, renewable energy investment programs and things like that. And so we do know that there's massive amounts of money printing. And we do know that massive amount of money printing will lead to massive amounts of inflation. Now, of course, like I said, the Fed tells us there's no inflation. They can't get it no matter what they do. But you and I know the difference. We see prices of everything going up. And we've seen other sources that track inflation, like Chapwood Index or Shadow Stats, and they're showing us that real inflation is about 10 to 15%. And of course, as people like us that have to actually go out and spend our money to pay for things, we know this as well. We know there's more stimulus coming. We know that if another crash comes, that's even more money printing, and we want to protect ourselves from that inflation. So how will Bitcoin hold up? We really don't know. But based off of the facts that I've laid out, how it's responded in the past, what the response to another crash will be, I believe that Bitcoin will be the place to be. It will be the lifeboat to be into. So let me know what you think. Do you agree with me? If not, let me know where I'm wrong. All right. Don't just tell me I'm an idiot. Tell me what I have wrong, or tell me you agree. All right. Give me a thumbs up on this video if you like it. If you don't like the video, give me a thumbs down, but tell me why in the comments down below. And that's what I got for you today. All right. To your success. I'm out.